Yeah, absolutely. In fact, back in the day, this would be 1996 and 1990, first half of 1997, when I was doing different tasks for O'Neill and was not his portfolio manager as of yet. I actually didn't trade the first hour simply because of my job tasks. It didn't allow me to. I was able to start watching the market usually around 7:30 or 8 in the morning. And as we all know, that the market in Pacific time starts at 6:30. So I would miss the first hour. And 1996 was my second year of triple-digit gains. 1997 was my third year of triple-digit gains, just barely. So it just goes to show that that first hour is ripe with a lot of volatility and fake-outs. And I keep reminding myself that because obviously I'm at the market at the opening bell. But yeah, there can be a bit of noise and volatility that can whipsaw investors that are perhaps not so in tune with those possibilities.
My answer would be I don't really care what the market's doing in the first hour. I'm kind of focused on my stock ideas. So let's look at a 5-minute of the NASDAQ this morning. They gapped it up in the morning. I'm seeing some of my stocks, like the Green Mountain is moving up a little bit. I'm seeing Win moving up to the 127, 128 area. Seeing a number of stocks trying to move up into areas I thought were shortable. I came in not too far off the opening and started hitting the market and really ramping up my short positions right away. So boom, the market broke down. Now, if the market had held and turned back up, I might back away, but I got aggressive very quickly. So I'll trade in the first hour. And I don't think that necessarily is a period you need to avoid. And yes, there can be a lot of bizarre action in the first hour, sometimes in the last hour. And we've seen those bizarre last hour rallies that seem to occur out of nowhere. But I think that if you're focused on individual stocks, you don't necessarily try to outthink the market, you know. So yeah, while you can get weird action during those periods, you can also get some very clean action to short, in this case, right into. Just like you know, if you have the reverse of this, it would be something good to buy into. But I can show you a lot of examples on the practical side, on the empirical side, where there are some meaningful opportunities either to short a gap up early in the day within the first hour. So, you know, again, the market's not black and white. And what Dr. K says is true. Sometimes it is best to avoid the first hour if it seems kind of strange. But sometimes when it's clean, it can provide you with a nice opportunity. Somebody's asking why the webinar is muted.
Say, if you're a beginning investor, that first hour can really, you know, it can whip you around. So I would, based on my experience, I would say you probably are better off avoiding the first hour as a beginning investor. Watch the market. Certainly watch it so you can get in tune with how the market tends to trade in that first hour. But maybe make a rule for yourself that you don't put on any positions until after the first hour is done. And then as you adjust to watching that first hour and learn how the market trades early in the morning, then you can start maybe getting your feet wet.
Yeah.